Hey, how are you? This is Larry Maybe. I just want to say what's up. I want to talk about the difference between a line of credit, a business line of credit, and business loans. I want to kind of give you some 8 things to think about. First thing I want to talk about is business credit. Well, whenever you're trying to establish a business, it's really important to use business credit. And what it is basically a line of credit that you use to establish your business. Um, it's a really powerful resource. When I was building my business with real estate, I used business credit and I had business loans. And I want to kind of talk about the difference between both of them. Um, Me personally, I prefer business lines of credit, but I want to talk about it. So, number one, business loans are one-time use. So, for example, if you get a business loan, it's specifically for a particular thing that you're trying to get. So, it could be for supplies, it could be for products, it could be for a particular building, things of that nature. But once you get it, it's pretty much locked in on that. And if you're trying to get something or you're trying to expand your business, I mean, it's okay for that. Um, Number two, when you get a business loan, it's different from when you get a business line of credit. Let me explain. A business line of credit you could use for a lot of things. So, for example, you could leverage a business line of credit, and leverage basically means to kind of use the line of credit for something else. Maybe you have payroll. A little issue with payroll because you might be trying to get some resources from some suppliers. You can use a business line of credit to leverage that for a temporary time. And again, I like that particular piece because it gives you more flexibility. And once you pay off, for example, let's say you have $100,000 line of credit. What that means is you have $100,000 available to you. So if you take off $50,000 to take care of some things, you only have to pay $50,000 back. Doesn't mean a lump sum. You pay a particular monthly fee. But once you loan that back, you also have that available again. Okay, so that's the power of a business line of credit. It allows you to leverage. Okay. Number three, with a business loan, you have a monthly payment. Well, if you have a business loan, you go to purchase something, bam, I mean, it's just like a car payment. If you buy a car, you purchase something, you have a payment. With a line of credit, once you pay it off, you don't have it available. Now, what I would encourage you to do, if you have a line of credit, I would encourage you to make a small type of purchase with it, because what happens is the underwriters, when they look at a line of credit and they notice that you haven't used it for a while, what they'll do is they'll cancel it on you. And I had a situation happen with me before I got started in my online business. So you want to make sure you have it. So you have a $50,000 credit. I recommend using about 5,000 and just, pay it off every month, but just make sure you keep using it. And then worst case scenario, they'll lower it to that amount. I had that happen as well. So if you're not feeling comfortable with that, then I would actually pull more from the line of credit. um, Another powerful thing, I don't have it on here, but you can actually take lines of credit and leverage it for other things. So sometimes it might be a good idea to maybe show a certain balance that you need to have in your account. So you can actually take a line of credit, some money from that line of credit, put it in another account and let it season for a while, and just kind of take some money from it and pay off that particular line of credit from the money that they actually have. You can do that as well. So, I mean, there's ways to kind of do it, but then you have that money sitting there. So when you want to try to go for a loan or something, you could probably go in from your personal standpoint, but you have this business line of credit here. But you still want to have your business account. There's ways to do that, but that's a powerful way that you can leverage to get more money as well. But I digress. So let's go back to here. So number four, the closing costs are higher for business loan than a business line of credit. And that's true because with a business loan, I mean, it's a one-stop shop, whereas a business line of credit, the creditors know that you can be using it constantly. So they usually charge a lower fee, okay, because they know that you can be a long base customer basically over a period of time. Okay, so that's kind of why you have that. Number five, business loans carry with them a fixed terms or amortization periods. That's true as well, because again, you have it for 3 years, 6 years, or whatever the actual loan is, it's fixed. Whereas a line of credit, once you pay it off or you pay something, you can always go back and extend the line. You can go back, especially if you've been really good with it, you can increase that line. If you've been a really good business partner with that particular company, you can ask for an extension and extend that line of credit or increase the line of credit. And that's very powerful as well. Okay, so number six, business loans are best for long term. So Also, something I really didn't talk about this is talk about this, but business loans help in terms of like your paydex score, but lines of credit help as well as far as your paydex score. And just for those people who don't know, you know how we have our Equifax, TransUnion, and let me see, Equifax, TransUnion, and I forget the other one, Experian, Equifax, and TransUnion. And these are our credit lines that we have for our personal. Well, for businesses, we have lines of credit too, but that's what we call paydex scores. And with a line of credit with your personal, you're trying to get like a 700 or more, whereas a paydex score is like an 80 for the business line. You want to try to have that, and it's going to kind of help you establish more credit, and you can actually leverage that for more types of things you want as well. So, oops. Okay, sorry about that. All right, so you definitely want to make sure that you take care of that. All right, so business loans carry higher rates, again, because it's a one-stop shop. They want to make as much money as they can for you for that period of time. So it's going to have a higher rate, whereas a line of credit is going to be a little bit lower typically, but you can leverage it for more. And you can kind of leverage it for your own financial situation too if you get into a bind. All right, so number 8, business loans are interest-driven rates, are interest-driven, interest rate-driven, while business lines of credit are not. And that's powerful because they can change based on the market. And so hopefully that's been beneficial to you. And if you're interested in learning more about what I do to make money online, click on the link below, and hopefully you can use this to help you expand your business. Okay, again, I'm Larry Mabry. Peace and love. You guys have a good one. Deuces. Bye-bye now.